Okay, see you guys.
All right, I gotta go unload a car.
Okay. Be
See you
careful.
guys. See ya.
Be careful.
See you
Well,
both.
we got a dumbwaiter in here, so that helps.
Right.
Not me, no, Rupert. It's a mechanical dumbwaiter.
Good afternoon. Wake up. It's a great day. I'm President Joyce Montgomery with a year of inspired action. We also have a very special person here today. Kathy Cohen is here, and we're so excited to see her.
Kathy Cohen.
Woo-hoo!
Oh, wait.
Welcome, Kathy. This is the fifth week of KPAD turn-in. Only 4 left before the event. Getting close, dig deep. But remember, every ticket sold is a step towards a home run for our community. To help us load the bases, here are 3 quick, inspired actions to cheer on for selling tickets. 1, the fast pitch. Be direct. Quick, confident ask is often the best pitch. The double play. Encourage buying in pairs. One for them, one to gift. The double play. Encourage the home run crowd. Start with friends, family, and coworkers. They're always our biggest fans. And remember to have the QR code ready to go. So let's close out the season with a triple crown, the ultimate great season. Our introspection today and our pledge is Milton Hardy. I couldn't see.
Good afternoon, everybody. I gotten a little better with over time. I'm gonna say it again. Good afternoon, everybody. As I get ready, thank you so much. That made me feel like Elvis up here. Listen, you guys have been so good to me since I've been here. This has been an amazing trip for me here. How many years have I been doing this now? Anybody know? About 4? Good enough for me. Today, I think I'll probably do it next week too, but I've taken on a job and I'll be moving up to Covington full time. I know.
Yay for a job.
Thank you. I'll be working for the Allegheny Covington Social Services dealing with foster care. Oh, yeah, my wife's part of that one. They've already let me know whenever I got leave out of here, I'm still a Kiwanian. I just won't be here. So to let y'all know, they're crazy too. I've met some of them, so if they're watching, turn it off. Anyway, but I just want to let you know, thank you from the bottom of my heart. You've made me feel welcome from day one, and I appreciate everything. As we gather today, we find ourselves standing in a season that speaks louder than words ever could. Spring. Spring is a reminder that change is not only inevitable, but necessary. Trees don't resist new leaves. Flowers don't question their blooming. Earth doesn't recognize for leave. Earth doesn't apologize for leaving winter behind. It simply embraces what comes next. And that's why I find myself today embracing change. As many of you know, now you know it, but I'll be transitioning to Covington. And like any other meaningful change, it comes with a mix of emotions. There's excitement for what lies ahead, but also deep gratitude for what I'm leaving behind. Because this place, these people, and this community have meant more to me than I can fully express. Change can be uncomfortable. It can stretch us. It can even shake us. Just like spring, it carries with it promise of growth. What we plant in one season often blooms in another. Seeds of relationships, service, and impact that we've sown here don't disappear, they grow, they multiply, and they continue to make a difference long after we've moved on. Kiwanis has always been about service, about pouring into others, often even without even seeing the full return. But that's the beauty of it. We trust that we trust that what we give matters. We trust that even the smallest act can create lasting change. So as I prepare for this next chapter, I don't see it as an ending. I see it as a continuation. The same commitment to serve, the same heart for people, just planted in a different field. And just like spring reminds us, new beginnings don't erase the past, they build upon it. Thank you for allowing me to be part of this journey with you. Thank you for your support, your partnership, and your shared commitment to making a difference. And as we all continue to move forward, wherever life may bring us, may we always embrace change, trust the process, and never stop planting seeds. Matter. Thank you.
I feel kind of called to say something about Milton because Milton's my friend. And one of the things about Milton is that he didn't join the club and show up every now and then or sit in the back and not say anything. Milton joined the club and he joined the club, capital J. He got involved with activities. He was up here giving the inspirational message. He was heading up KPAD teams. He became a full-fledged member from day one. And I think he's really a role model for everybody that joins the club. Jump in with both feet. That's the best way to experience Kiwanis. Jump in there, volunteer for things, do things, and you'll have a wonderful experience. And Milton, we're gonna miss you, but your example will live on, buddy. Thank you. Give me a hug.
Okay. And because I'm a veteran, and plus I look pretty cool in this sweater, let's do the pledge. I pledge allegiance to the flag of the United States of America, to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Thank you, Milton. Now I'd like to ask Andre Brooks to come up and introduce the guest.
Thank you, President Joyce. Today, Paul McWagner is with us, the guest of Bill Bespich. Please remain standing until we thank you all with our applause after everyone's introduced. John Morris is the guest of J.C. Taylor and Joe Gaither. Is John with us? Okay. Dominique Harden is the guest of Courtney Plaster. And then we have the fan club over here at this table, I believe. The people who came to hear our speaker today, and we're delighted to have them as well. Denise and Dowell and Reverend Adrian Dowell. And they say there are Joe Gaither and J.C. Taylor, of course, as well as Denise. Right. And then Cherie Beard is also a guest of our speaker. So welcome to you all. Thank you for coming today.
Many directions. We're off of West Ridge Road going up towards.
I just want to remind you that we're here every Wednesday. We have a lunch, we have fellowship, we do a lot of work for our community, and we have a good time. Right, fellow Kiwanians? So welcome.
Thank you, Andre. Now, KPAD report. We are ready to see how week 4
Didn't call, they
coming
called me.
along. They're a little slow to get up to bat here. All right.
Are they good?
They must be carrying a lot of money.
I learned my lesson this week, last week rather, and I'm going to be speaking into the microphone for a change. It doesn't mean I'm not excited. I'm very excited. We have good news, and I have Lois backing me up with a baseball bat because she is at bat for our community, and I have brought along my mitt as well to catch those dollars for K-Pad. And I'm just saying, look, each week we're going to throw this up on there, and it's bragging rights for some, and it's encouragement for others. We really, really appreciate your efforts to get those ticket sales out. But now we're transitioning from catching to swatting. And we have some good news this week. Let's go ahead to the next slide, please. All right, just to remind you, we're looking at a pennant race as well as a home run derby. Next slide. All right, where are we at? So who is going to win the golden spatula? Right now, the leader after 4 weeks is Reef Kessler's Sausage Swatters.
And I got this for you.
This is an early brag. What's that? I'm wearing this blue jersey, but don't get nervous. This has nothing to do with basketball. It is a nice blue color, though. There is only one ACC team still playing in the tournament, but it has nothing to do with that. No, what I'm up here for is to give credit to the most important member of the Sausage Swatters. I mean, he has been a legend in the baseball world. He is a shoo-in to be in the Hall of Fame on his first day of eligibility. He, as you will see here shortly, is way ahead in the home run derby this particular year. I want to just give a particular shout out to the all-star of the league, the all-star of the league, Babe Ruth. Thank you, Rupert.
Reef's got your ball cap. You win that for being a home run derby winner now. So let's go on to the, we noticed that I'm sorry, go back one. Not only do we have the Sausage Swatters just hitting it out of the park, I have to give credit to the staying power of the cleanup batters and Steve English. They continue to stay competitive, as well as Scott Smith. And so those teams continue to do very well. Next slide, please. Here's the leaderboard. And as you see, Rube Cutler is, as Reef said, far and away the biggest swatter. But we have also Mike Loveman's contributions. And look, we've added some sluggers down below. We have 8 contributing up to $800, ranging from Vern Danielson's generous gift to Randy Myers. And Randy Myers wins the coveted K-Pad baseball cap along because he tied with Reef this week, which is an achievement in and of itself. So congratulations, and wear that with pride. Then we've got more designated hitters coming on board, and those designated hitters are ranging between 400 and 500. You can see them up there. We've added 3 this week, which is terrific. I've also added a feature to our stats, which is the zero tracker. Week 4, we're at 92 Kiwanians that haven't turned in any ticket sales. We're hoping to rectify that coming up next week. Really, folks, let's get off those zeros. And even if you just buy 2 tickets, even just 1 ticket, you come off of the zero, and it really, that adds up among 92. I'm not going to do public math. Oh, I lied. But if everybody gave $10, that's $920, right? That's pretty good. And we can continue to add week after week. So the best team for no zeros as it stands is Mike Franzise's team, the Maple Miracles. So congratulations to the Maple Miracles. I don't think Mike is here today. Okay. Okay, there's Courtney. She can accept. Oh, there. Yeah. All right. Next slide, please. Next slide. And here we go. Here's the home run derby. We're going to be expanding the Great Green Wall here shortly, but as you can see, Reef Kessler as team, the Sausage Schwatters lead at 64-38. Next closest is the Maple Miracles with Mike Franzese, and then Steve English, his team, the cleanup batters. And you can see the status of the other teams. And I hope this encourages folks to get out, start making some phone calls, buy those tickets for your friends and family, and they'll come and get unlimited pancakes and sausage. So not to mention a great time with some good music. So Reef's team leads on the home run derby board. They are twice as productive of every other team. I don't want to see Reef win week after week. Don't get me wrong. Okay, I know. Don't get me wrong. I love it. I love it that Roop is winning week after week. But I'd like to see some other folks get up on the board a little bit higher, and let's raise and compete with Reef so he doesn't cross the finish line unopposed. Next slide, please. Here's a summary of overall ticket sales. I should say week 4 total, but this was week 4. It was $5,220. And overall, this is our cumulative total for 4 weeks. Ladies and gentlemen, fellow Kiwanians, I think that's pretty good, but I think we can do better. And let's do it a little bit at a time so it's not so painful. And then I'm hoping to break that 20,000 barrier with turn-ins today. And then let's get to the highest number possible. And let's encourage friends and family to buy those tickets. Thank you.
I'm Harry Zuloff. I'm head of the volunteer sign up, and you all would have received an email this week to sign up with a link. And I've also put QR codes on the table today. And as proof, I mean, any fool can use this QR code. As an example, Melissa, didn't you sign up just a minute ago with the QR code? What can I say? So, oh, yeah, I know it. So, you got the link, you got QR code, take it home if most of you have a smartphone. Eddie Barnes, I'm not quite sure if his was a smartphone today, but we'll check that one out. But anyway, we need signups. Not right about 20 people have signed up since Monday evening. So each week we'll be monitoring it and urging you to sign up. Thanks so much. Appreciate it.
All right. I guess KPAD's over. Just remember, we have 4 weeks left to KPAD, right? Four weeks left. So please try to get all your team to donate something and give these tickets away if they don't want to use them, because we want to feed a lot of people April the 25th. And there are 2 weeks after KPAD for turn-ins as well. All right, announcements today. Environmental meeting as soon as the meeting is over. The Blue Ridge Marathon volunteer sign up is complete, which will be April the 18th. Earth Day exhibit on April the 18th. Does Courtney or Sherry want to speak on that or just announce it? Okay, this is the Environment Committee's project is Earth Day. So that's on the April the 18th. Kids Fishing Day is set for May the 16th. So sign up sheets will be coming soon. Andre has an announcement she would like to do. Oh, there she is.
I say this almost every week. I get tired listening to all the projects that we do. It's just wonderful, and I love to participate in them as well. But we need to have fun too, right? So I put a questionnaire on the table for you to fill out from the Fun Committee, giving us your input, which activities you like best, maybe how much you'd like to spend on an evening out, and if you'd like to join our committee. So if you would, fill those out and hand it to one of the Fun Committee members. I'll also be sending it out to you a little bit later electronically. But we'd love to have your input so we know what to plan. Thank you, Madam President.
Hey, thank you. Hope you didn't have any trouble.
Also, if you need to look up something or know about a time for an activity, where can you find it? Yes, the website. Thank you. All right, time for brag. I know Joe Limmer has a brag. Does anyone else have a brag? Come on up. Yay.
Just a brief brag. I was 78 years old yesterday, so I got a check for $78.
We want it only in this one zone.
Yeah, it was only the one main.
Zone 1. And that is
J.C. Taylor, I have a brag and a statement, so I don't have to pay for one. Okay, if you're driving an all-electric vehicle, will you stand up? We're not buying any gas. Thank you all. Even at $4 a gallon. A brag today is I'm bragging on my pastor who's here today, Pastor Dow. Last week I had a little incident. I overtook some medication, not knowing what I was doing. Got home and going to sleep all the way home. I thought it was just normal, but it wasn't. I got home and hit the sofa and I was out. And next thing I know, I did call Pastor, not about that, but about something else. And I think he thought I was maybe a little drowsy. So within about 30 minutes, he was on my front porch. I said, what are you doing on? So he came over to see me that night to make sure I was all right. So I think that's a great brag to think you have a pastor of that much compassion for his people.
well, we instruct this.
Getting towards the end of a capital campaign is tough. We have a Star City Challenge going out. It's a very positive campaign for all we're doing to make our valley better and to reduce homelessness. And this is on behalf of the Ram House, of whom I'm the director. Last week, I made some requests to some of the Kiwanians that are my friends that I know. I haven't gotten to know everyone, but I did ask some people. And if you would stand up, I got quite a response. There was Larry and his wife, Vicki. There was Mayor Joe Cobb, Jeff Vick, Bert Boyd and his lovely wife, Trish White Boyd, Don Witt, Sherry Hartman, Val Brown, Diane Chitwood, who was a former member, Lois James, who gave generously, Rita Joyce, my dear friend, and someone who's visiting today, Rabbi Kathy Cohen. If you guys would just thank you from the bottom of my heart for caring about us.
If y'all remember last year, my partner makes carpenter bee traps. He donated 12 last year to go 100% KPAD. Again, 12, 100% go to KPAD. I've got 5 of them here. If somebody wants them, they're $10 a piece. And we're bringing some more back.
Hello, everybody. I'm Courtney Plaster, and my brag is for my birthday coming up. So on March 28th, I will be 56 years old. And I guess that means I need to open up my wallet, but I only have $4, John.
Okay, just 1 second.
So if he takes Apple Pay, you're in luck. Anyway, happy birthday to me.
What, you drawing?
Yeah.
Don Witt here, and I'm talking, being obnoxious again about Penn State wrestling. They won their 5th national championship in a row, and they had the highest number of points they've ever had. And they had 6 finalists wrestling out of 10, and 4 of them won.
Right? Yep. Well.
Ever how you want to do it.
All right. Now I'm going to ask JC Taylor to come forward and introduce our guests.
And if
He's
you can't
even
hear
closer this week.
Thank you.
Good afternoon to all of you again. Today I'm happy to introduce our special guest today and friend, charming, lovely lady, Candace Dow. Candace is a financial advisor with Edward Jones, serving individuals, families, and who seek thoughtful, value-aligned financial guidance. With more than 10 years of experience spanning retail banking, small business strategy, financial education, and nonprofit governance, Candace is known for translating complex financial concepts into real actionable guidance. In addition to her advisory work, Candace is the founder of Faith Financial and Consulting, LLC, Nothing Wasted, LLC, where she has supported entrepreneurs and organizations with financial structure, planning, and accountability. She also serves as an associate minister at Shiloh Baptist Church and has held multiple board and treasurer roles within the Roanoke community, including Hope Tree Financial Family Services. Candace's work is driven by a commitment to financial education, responsible stewardship, and helping individuals make informed decisions that align with both their goals and their values. Ladies and gentlemen, fellow Kiwanians, may I present to you Miss Candace Dow. Hear ye her.
David, before we get started, you're good to go on the PowerPoint. Don't even worry about it. I was trying to give you all a visual aid so you could look at something other than myself, but on today, it looks like you're okay. I have a 3-year-old, so like Lilo and Stitch is really big in our household right now. You see me with my phone. I'm starting my timer. Deacon Taylor told me I have a strict timeline, so I'm going to do my best to adhere to that. And I'm going to keep track of myself. Before I get started, I do want to thank Deacon Taylor for inviting me today. He invited me back in January. He had been, hey, you're going to come with me, and I was able to come that day. I believe the speaker was from the president of Roanoke College that day. Thoroughly enjoyed myself. And at that time, Deacon Taylor asked, hey, would you come back and give a market update? Little did he know that we would have had so much volatility in the market. It's perfect timing for an update, right? I do want to acknowledge my parents, Reverend Adrian Dow and Denise Dow. Thank you for supporting me, Coach Joe. He's known me since I was itty bitty and one of my childhood best friends, Sharice Beard, for being here to support me. So to be mindful of your time, I'm gonna go ahead and get started. I do want to give a quick highlight rather. I'm not going to be able to answer specific questions today, just out of convenience of time, one, and I want to make sure that I'm keeping in mind confidentiality. So if you have any particular questions about your individual portfolio or anything like that, feel free to touch base with me at another time. But prayerfully, what you get from this today will answer any of the questions that you were going to have before. So there's a couple key areas that I'm going to quickly try to go through today. It's going to be a lot in a condensed time period. So like I said, if you have any additional questions, feel free to reach out to me and touch base with me. I'm going to touch on areas of market performance, navigating volatility, what some of the views are in the financial world around this right now, and some of the market policy implications that are coming from policies that are being implemented, and possibly what that could mean for you in your portfolio. So the first thing that I want to focus on today is going to be the financial markets. Stocks have delivered very strong returns in recent.
Yeah, that was great. Great.
Since 2015, the S&P 500 annualized rate of more than 13%, while bonds have grown at an annualized rate of 2%. So more recently, with heightened volatility stemming from the conflict on market performance, and that's left stocks performing a little bit lower, and bonds are modestly higher year to date. So what does that mean from a sector perspective for you guys in your portfolio? With both value and growth-oriented sectors posting solid performance. The S&P 500 has 11 sectors, and all of those have generated a positive return for this period. So year to date, cyclical and value style sectors have led the market, and energy has been a top performer, gaining more than 20% as it's supported by higher oil prices. The financial sector has also has underperformed. Intelligence and disruptive private credit exposure has contributed to a portion of the pullback in the sector. Now, if we had my PowerPoint going user error, David did his best to arrange that for me today. I'd have stocks have risen across the market cap spectrum over the past 1 to 3 years. In year to date, out of the large, small, and mid cap sectors or stock sectors, mid and small cap have been overperforming, while large stocks have style stocks have both delivered strong 1 and 3 year returns with double-digit gains across both horizons. So in 2026, even though we're very early on in the year, value has outperformed and been supported by strength in energy and on a regional basis, we have a global equity chart that we like to show. And if I would show you that chart today, you would see the international stocks have seen the stronger pullbacks. The international stocks have still remained higher in performance year to date. So in our view, the recent weakness of international equities really does reflect, right? So regions such as South Korea, regions as Japan and the Euro area, they've all been amongst some of the laggards here as of late since the inception of the conflict in February 28th, large share of energy that they consume. So that leaves them more vulnerable to stock prices. If we pivot over to consideration around fixed income investments, these are going to be your bonds, your CDs, strong return over the past 1 and 3 year time periods, with each of the recommended fixed income assets posting gains over these periods. There's been a decline in some of the U.S. Treasury yields investment grade bonds over the past year. What I do want to mention when you're considering fixed income securities, specifically bonds, please keep in mind that investing in bonds, biggest ones with bonds are credit and market risk. And bond prices typically fall when we see interest rates rising. We always say that those operate on a seesaw. And one of the things that you could be tempted to do is to sell your, ultimately that's going to result in a loss of principal for you. So those are two key areas that I would want you to consider and to keep in mind if you're considering any type of fixed income investments. Now, outside of bonds, one of his clients and friends has been precious metals, also known as gold and silver. How many of you all have taken advantage of gold and silver? Just heard the chatter around gold and silver as of late. It's been heavy in the market. The performance of both gold and silver. For gold, it has surged within the last year over 70%. Silver, we've seen a surge of that in over $1 and the rising interest rate in conjunction with geopolitical uncertainty and strong price momentum. Those have all contributed to those recent gains. So while the returns on precious metals are Remember that historically, gold and silver have both delivered lower returns than equities. U.S. stocks generally outperform, and within the past 10 years, they've outperformed gold and silver by 60% in a 10-year rolling period. Addition has grown at a 10% annualized rate. Historically, gold has shown a low correlation with stocks and bonds, and that just means that the returns tend to move independently. While silver often moves in the same general direction as gold, it behaves in portfolios in a meaningfully different way. Silver is far more tied to the industrial sector. So the growth linked demand that has more correlation with equities market stress. So though precious metals and gold and silver may seem ideal right now, be mindful of their correlation to market performance. So if we were to look at what the market and how the market is performing in perspective, we want to acknowledge that it is normal for market volatility, right? You're going to see the market go up and down. And as I previously stated, since the beginning of 2026, and especially with a lot of previously mentioned, the US and Israel launched strikes against Iran on February 28th. Because of this prompting, Iran then did issue some counterattacks in multiple Middle East, rarely talk politics or bring politics into your investing, but this particular incident has made a meaningful impact on one of the largest oil producers. Accounts for roughly 4% of global oil supplies, with about 80% of its exports going to China. So Iran occupies a strategically important position, and it controls access 20%
Make
of
sure
the
you got
world's oil
eyes on
supplies
your dog.
flows. So why does this matter? Is directly impacting the cost of oil, which is directly impacting portfolios. So oil prices have risen in response, and equity markets have these attacks. However, from a market perspective, markets again have historically overcome geopolitical uncertainty on average within 6 months to 12 months of any type of major geopolitical event. So while there's no guarantee that history is going to repeat itself, we do believe that it reiterates the importance of long-term vision. Additionally, it's worth reiterating that volatility is a normal part of investing. Since 2019, the S&P 500 has pandemic, and the second came around in 2022. And still, even with navigating those bear markets, we still ended and navigated at advanced to new highs. More recently, in 2025, just back, a 19% pullback, and ultimately gained 17.9% for the year, underscoring the market's resilience over time. Tensions may cause some periodic bouts of volatility and uncertainties among investors. We continue to believe that you are still best served by maintaining a well-diversified portfolio that, again, aligns with your long-term goals rather than reacting to headlines. An advisor perspective, and how do we feel that this plays for you? Looking at some key macro and market views, higher global oil prices are likely to cause headline CPI to rise pretty quickly. And with that being said, energy. Since 2021, we've had higher energy costs, and that could prompt a more conscious approach to additional easing on monetary policy. That being said, we to halt the Fed's easing cycle. We continue to anticipate that there will be two Fed rate cuts within this year. They may get pushed back later as the Fed waits for clearer evidence that the underlying price pressures are receding. So with a lot that's going on in inflation, in February, inflation came on CPI rising 0.3% for the month with a rise of 2.4 annualized over the year. Where we saw this translate was over into the cost of goods. Goods prices have risen from level lows while services are higher. All this circles back to the cost of oil. The rise in the cost of oil prices is likely to cause higher headline inflation, through energy prices, which then tend to pass directly through to the consumer. So while the duration of the conflict in Iran still remains how the market is going to react in both size and persistence in conjunction with the oil shock. And while firmer headline inflation may encourage the Federal Reserve to proceed more cautiously with additional rate cuts, we still derail the broader easing cycle. If we were to pivot and look at GDP, in fourth quarter, with real GDP rising to 0.7% on an annualized basis, government spending. That was tied to the shutdown that began October 1st of 2025, and it extended to November 12th of 2025. During that time period, government consumption investment fell to 5.8, giving room for a 1% headline for GDP growth. Looking into 2026, we do expect a call for real GDP growth to maintain around 2%, which consumption accounts for the largest share of U.S. GDP. Technology investment has also contributed meaningfully to the economic growth. Data GPT in 2022. So although data centers are still represent a relatively small part of the portion of the U.S. investment site to technology, spending have been notably strong because of the advancement of AI and the introduction of Chat GPT. We've seen a growth of 37% annualized by the fourth quarter of last year due to the introduction of AI and Chat GPT. That, in conjunction with consumer spending, it's helped prompt consumer spending is important support, and this will provide important support for overall economic growth. The resilience has persisted even though there's been a slight decline in consumer confidence. Where are we getting this from? We've noticed that higher income households have tentatively consistently maintained their spending habits, and they are the majority total of consumer spending. While we look at lower to middle income families and weaker confidence, and they've not benefited as much from likely substantial gains within the market and from real estate valuation. So, strong household disposable income relative to debt service obligations continues to provide support for spending. Your debt service obligation is the share of disposable income that you have that all in all within the last 30 years that still remains low and well below pre-pandemic limits, even though we've seen a slight uptick and it's starting to edge higher here within recent months. But similarly, consumer loan delinquency despite recent upward trends. All right. So focusing on the S&P 500 quickly for a moment. Core price to earning ratios remain above its long run average, be essential to sustaining equity performance in the coming months. S&P 500 earnings grew at a double-digit pace in 2025, and we do expect that to continue well into 2020. It's a brief summary of everything that I just shared with you. Despite the prospect of somewhat higher inflation in the near term, we do expect the Federal Reserve's easing cycle to remain in months, but the rise in oil prices is likely to place upward pressure on headline readings in months ahead. Job growth has slowed, and several measures of labor and demand have cooled. However, initial job loss claims still low. The unemployment rate is still holding at 4.4%. Additionally, real GDP posted healthy growth in 2025, finishing out 2026. So outside of geopolitical events, outside of normal market volatility, we have something else that plays into the market. On February 20th, the Supreme Court struck down the president's sweeping global tariffs by a 6-3 vote. And while the president has signaled an intention to raise the tariffs associated with this, not yet an executive order that shows that there will be a formal increase in the surcharge. Because tariffs, we know, have been a core component of makers are going to actively pursue alternative pathways to reinstate some of the tariffs just invalidated by the Supreme Court ruling. We also believe that the tax cuts that were passed down in 2026, based on reports from the Congressional Budget Office, they estimate that households across the income spectrum will benefit from larger tax refunds. 26 is our hope that this provides a boost to consumer spending and economic growth. So the Supreme Court, like I said, ruled against this lowers the effective tariff rate, but we still do expect tariffs to remain a key policy tool for the White House, which will contribute to some of the market volatility that you may see. What I do want to say and just reiterate, as you heard me say, politics with your portfolio. Stick to your long-term investment strategy, no matter what outside of the aisle that you sit on, and base your investment decisions on what your long-term needs are, and do not make niche jerk breakdown. So what I would like to do is kind of pivot quickly in closing to let you know what some of this may look like as far as opportunity is concerned when it comes to that we've seen year to date. We do believe that the global economic backdrop remains healthy, supporting an overweight in the equity sector relative to the fixed income U.S. and international markets, and to offset underweighing internationally developed large cap stocks, U.S. investment grade bonds, and U.S. high yield bonds and international bonds. At a sector level, we do make a recommendation within your portfolio. This includes consumer discretionary holdings, industrial holdings, and healthcare, while underweighing consumer staples and utilities. The consumer discretionary sector has and the recent geopolitical events, but valuations still do appear favorable within the remainder of the year, and the sector should perform well if consumption does hold up. Healthcare has lagged over the past year, some components of growth and value within the group, and it could still hold up well if the economy softens. Valuations in the healthcare space are also not extended versus history. The industrial sector has high end of the range. So ultimately, what we would recommend would be a neutral allocation between growth and value style stocks and excitement about the growth, but over time, other sectors may benefit from AI productivity gains as well. With the 10-year treasury yield trading within our neutral range of 4 to maintain the neutral allocation duration compared to the Bloomberg US Aggregate Bond Index. The Aggregate Bond Index is a broad-based benchmark that measures the investment grade US dollar-dominated fixed rate taxable bond market. One times you're facing lots of uncertainty and unknown, I want to remind you that everyone that is successful in investing practices a few things. You practice discipline, you practice the ability to control your emotion, and you portfolio goals. There are a few investors, long-term investors, who did just that, and we know that it all turned out well from them. Whether it was John Bogle, who founded Vanguard Group, he popularized the index fund in CEO of Berkshire Hathaway, known as Oracle of Omaha. All of them maintained their long-term perspective and stuck it out, keeping their personal long-term goals in mind. And anytime there was a market that presented volatility, continue to act off of emotion. And if you are plugged in with a qualified financial advisor, lean on them. That's what they're there for. It's not all about transactional relationships and trades and just bringing in money. We're there to substance of life with you. That's all I have for you today. Thank you for having me.
Oh, wow.
Thank you, Candace. I need you to stand back up. She has asked for her honorarium to go to Hope Tree Family Services. All right. Next week, Dr. Carl James and Michael Brocto will be the person introducing the guest, and it's Virginia Higher Education Center. So we'll see you next week.